Hey everyone! NIO stock dropped nearly 13% during pre-market hours. Find out if it's a bull market correction or something bigger. So why is NIO stock down today? And yesterday it dropped by nearly 13% during pre-market hours, falling below $6 per share at the start of the trading session. Is this the end of the bull market, or are we simply witnessing a temporary and healthy correction? I'll give you a straightforward answer. Without any extra fluff, it's a healthy correction. But first, let's understand why this drop happened. The primary reason NIO stock is down is due to the market's disappointment over the absence of anticipated government stimulus. Investors had expected additional support from the Chinese government, but none materialized, leading to a sell-off. Particularly in the Hong Kong Stock Exchange, NIO shares were hit hard. However, it's important to note that this is not reflective of the broader situation in China's mainland market. In China, investor sentiment toward the stock market remains highly optimistic. There's growing enthusiasm for investing. Some are even going as far as selling their homes to raise cash for stock investments or borrowing from institutions like Alipay to fuel their market participation. However, much of this capital has yet to enter the market fully. It's on the way. This signifies that the current downturn is more of a precursor to a significant bull run in China. Despite the recent sluggishness in the stock market, there's been a resurgence in activity and interest, which signals a potential revitalization. In fact, the larger institutional players haven't even made their moves yet, and once they do, we could see a substantial increase in market activity. As a result, this could drive stock prices, including NIO, upward in the near future. For context, while the Hong Kong Stock Exchange saw declines, the Shanghai Stock Exchange was trending upwards, with many domestic stocks in China posting gains of 10% to 20%. This surge in enthusiasm bodes well for the broader market outlook, and the excitement is palpable. However, we must acknowledge that markets often get overbought. Currently, the Shanghai Stock Exchange has a relative strength index RSI exceeding 90, a level far beyond the usual 80 RSI threshold, signaling overbought conditions. This suggests that a pullback might be on the horizon, as the market needs to recalibrate after such rapid gains. We may see the Shanghai Stock Exchange undergo a minor correction, similar to what we've witnessed with NIO stock. NIO's recent pullback should be viewed as an opportunity rather than a cause for concern. Every dip presents a chance to accumulate shares at a lower price. I don't think we'll see NIO stock in the single digits for much longer. By next year, as the company begins delivering over 30,000 vehicles per month, the stock price is likely to break past the $10 mark and continue climbing. NIO's future revenue growth potential is immense. This anticipated growth will eventually be reflected in the stock price, making the current valuation appear extremely undervalued. There's simply no rational reason for NIO stock to remain under $10 a share, especially given the broader excitement about investing in China. While it's easy to get swept up in the volatility, we need to understand that pullbacks like these are a natural part of a bull market. In strong bull markets, prices tend to rise gradually with occasional sharp corrections. These brief dips are often followed by slow, steady climbs. Conversely, bear markets are characterized by gradual declines with short, sharp pops. What we're seeing with NIO and the broader Chinese market is the typical behavior of a bull market: slow gains, followed by sudden, brief corrections. Now, let's shift focus to NIO corporate strategy. The company's priority is to ramp up the production of its Envo vehicles. Additionally, NIO plans to transition all of its existing models to the NT 3.0 platform by next year. This includes the ET9, which, while expensive, isn't expected to be a volume seller due to its high price tag of around 800,000 RMB, approximately $130,000. The more affordable SUVs and other models transitioning to the third-gen platform will have features like 800-volt fast charging, larger screens, and enhanced comfort, which will drive sales. Among NIO existing customers, Many have chosen not to upgrade from the first or second gen models because they didn't perceive enough added value in the NT 2.0 cars. Features like LiDAR and better processing chips weren't compelling enough for these owners to make the switch. What they really want are the enhanced charging speeds and horizontal screens offered by the NT 3.0 platform. Once these models are rolled out, many existing customers are likely to upgrade, contributing to increased deliveries and sales. Looking ahead, 2025 and 2026 will likely be pivotal years for NIO growth. The company is well positioned for success, and while today's downturn might seem alarming, it's simply a minor setback. By the time the market fully digests these developments, we could even see a recovery later this week. This pullback is a buying opportunity for those who are confident in NIO long-term prospects. The decision ultimately lies with you. Will you seize this opportunity or be driven by fear? From my perspective, this dip is insignificant in the grand scheme of where NIO will be in a few years. I'm more than willing to wait, as NIO is poised to become a massive player in the EV market. 2 years from now, NIO stock price will be a far cry from what it is today. The lack of government stimulus may have spooked some investors, causing NIO stock to drop. But this is just a minor hiccup in the broader trajectory of the company. The underlying fundamentals remain strong, and the long-term outlook is bullish. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.